Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us from the CME in Chicago. Tim, hello to you. Thank you for being with us. Oil very much on our radar at the moment, but gold, the precious metal, is one that you've certainly been taking a closer look at in the lead up to the US Federal Reserve.
Hi, Natalie. Nice to be with you today. Yeah, I mean, gold's been on its heels here. We're finishing up the fourth session in a row as we're finishing up lower. You know, it's been a pretty quiet trade here over that stretch. You know, a variety of reasons for that. I mean, the dollar, you know, has found a decent bottom, not a whole lot of volume to go along with it. But, you know, I think, you know, a lot of the issues the Trump administration had been facing, a lot of speculation about the severity, you know, of the way the Comey, Director Comey's discussion with Congress was going to go. You know, that while damaging in itself for a number of reasons, you know, I think the things that most people feared, you know, didn't transpire. So I think the dollar generally has benefited from that. But, you know, as we approach the Fed meeting on Wednesday, you know, that's obviously not in the expectation that we're going to see rates increased. You know, that's not an environment that gold is really going to thrive a whole lot in. So, you know, we've been on the softer side here over the last 4 days. Could possibly even continue into the meeting on Wednesday. But, you know, I think we're looking for better times ahead for gold on the other side of that meeting on Wednesday.
Certainly, we are currently seeing gold finishing its fourth session lower. In terms of that upside that you mentioned, I mean, what sort of price targets are you looking at then, Tim?
Well, I mean, that 1,300 level, I mean, it's been tough. I mean, you know, the market already tested it, and there was a lot of volume through it, and the market defended that area pretty well. I mean, because if you go back and look at a price chart, you know, I mean, we've really been in a 6-year downtrend, and you can draw a pretty much a straight line down, you know, on the top of that price action over that 6-year period. You know, it just so happened as we approached that 1,300 level early last week, you know, we actually broke that 6-year trend line for the first time in 6 years. You know, so I thought that was a pretty significant technical development. But, you know, there was a lot of willing sellers there at 1,300, so the market wasn't able to penetrate through that level. But, you know, we have a plethora of fundamental scenarios that could play favorably for gold. And, you know, I think any flare-up of any one of those or a variety of those simultaneously, you know, that should be able to provide the market enough buying power to finally push through that 1,300 level. And I think 1,350 ultimately would be the next major technical resistance point from there.
Certainly, we could look to any number of global geopolitical issues that we do have taking place at the moment. But one item that particularly I wanted to talk to you about was inflation. Now, globally, of course, this is something that we've been looking to and discussing a lot. Gold, as we know, a hedge against inflation. Will it continue to play that role in this equation?
I mean, frankly, I think that's a role it's playing now. You know, I mean, if you use kind of the more traditional measures for inflation, there's no inflation to be had currently. You know, but if you define inflation by the increase in the money supply, which it is, higher prices are normally a consequence of inflation. There's a lot of inflation. I mean, and that is because of U.S. monetary policy out of the Eurozone. You know, we're generally living in an easy money world right now. You know, obviously in the United States, we're trying to move away from that at a snail's pace, really. But, you know, the money supply is big. And I think that some of the behavior that we've seen in global equity markets, you know, and the fact that they have not discounted risk, at least in my opinion, very well at all. I mean, frankly, the markets have gotten very, very complacent. You know, issues that really could affect the market significantly, the market just seems to ignore. And I think a lot of that has to do with the excessive liquidity that is in the market. You know, and I think gold is one of the few markets that is available to investors, you know, where you can identify that and use that ultimately as a hedge. And I think gold has actually performed this year. It's up about 10% on the year right now. And I think the gold market's a little ahead of the others in anticipating potentially higher prices down the road based on the inflation in the money supply.
And just with that in mind, of course, we look to gold as being that safe haven status. We do have this real disconnect going on at the moment. Bond markets are telling us that there are concerns ahead. Equity markets, you can't beat off that rally with a stick, albeit this downward momentum that we have seen in the last couple of days. And then gold, of course, we also have this safe haven now moving to the downside. What are these different moving parts telling us about the overall investment story?
I mean, it's tough to draw a strong conclusion if you look at, all the parts and the way that they're historically correlated and then the way they're behaving against each other now. I mean, I'm going to go back to the point I just made. I mean, I think the behavior of the market is a consequence of market distortion and excess liquidity. The bond market's behavior would suggest that the stock market is turning over. I mean, if you have a quote board up and you turn your stock quotes off and you've been following the bond market the last couple of weeks, you would expect if you turn your stock quotes back on that there's going to be a lot of red on the board, and that just hasn't been the case. So I think there's a little too much money floating in the system currently to where we're getting fair pricing and where you would see those historical correlations continue. Again, I think gold is actually doing a good job of kind of telling us a little better on what's to come, rather than what's here in front of us. And I think that's a story the equity markets are telling us currently.
Tim, great to have you with us. Thank you so much.
All right. Thanks, Natalie. Have a nice day.